Okay, all right, everyone. Welcome to an emergency update, I guess. As you guys know, it's been a really tough 2-3 weeks for the portfolio. We're down more than 10% in a very short period of time. So I thought I'll do this emergency update just because, number one, I don't shy away from the criticism. And then two, I just want to let you know that I'm here with you facing all these troubles, and I've had sleepless nights as well, wondering what the hell happened. But we've done it. It's portfolio evaluation, and we'll take it from there. Yeah, so forgive me for the lack of quality. My stuff is still on its way from Singapore. I'm still using my crappy laptop camera and stuff. So never mind. Here we go. Okay, so I kind of shared this the last investor call. You can go back and look at it. One of the things we want to say is we try and be neutral to whatever's happening in the market. We just have to take it as it comes, and this is really what this stoic philosophy is about. And I said this in the last call, that everything had to go right for us to be up so much in the first quarter, and boy was I mean, I got this from Shit's Creek, but this, yeah, never have I said so many stupid things or so many things gone wrong for us in our portfolio at the same time for this to have happened. It's insane to think about. But yeah, so really the stocks I want to look at, the major contributors to our portfolio. CRK, Baba, Simo, China National Building, Dollar CHF, and Wire. So if you think about like where these sectors are, CRK is really a net gas play. Baba is a Chinese e-commerce. Simo is Semiconductors. National Building is infrastructure in China, and US dollar is US dollar, and Wire is copper. So these are all very vastly different bets, right? But they all went wrong at the same time, and that's kind of why we're facing this -10 very sudden and drastically. So just to recap, what I'm going to do is I'm going to recap the thesis. I'm going to show you why I'm still holding on to the position, because I don't think it's terrible. And then, yeah, and how I see this kind of turning out. So to recap the thesis on net gas, what we said is that, the ones in green are kind of the green energy. Coal is the least preferred method of powering the world. Second is oil. Then you come to net gas, nuclear, and of course solar and wind and hydroelectric and all that are way at the top. We prefer that because of our green movement, right? But net gas is a nice transition element. It doesn't take long for you to build a net gas power plant. And there are a lot of net gas power plants right now in Europe and in US because they're considered green. And so what has happened is that we bought CRK because the margins on them were very good. And when we bought it, if you can see, net gas has actually fallen quite a bit by the time we got into CRK. So going back, we wanted to buy the best asset that reflected net gas, right? So based on the comps that they provided, they are having one of the best margins in terms of, you can see here, Comstock is right at the corner, right here, and produces one of the best margins per MCFE. And yeah, their EBITDA margins are one of the best in the industry, right? Better than their peers. So we wanted the best asset to express the view. So what has happened is that net gas has continued to fall. When we bought in, I think net gas was around $2.20, $2.30, something around that. It's now $1.90, so it's more than 10% drop, to nearly 20% drop, and it could have been higher. I don't know exactly when we entered, but something like that. And you can see net gas has fallen all the way from about $9-10 to where it is now. It's like $2, right? So this is an 80% drop. The question is, does it deserve this 80% drop? My view is this is a bit oversold, so my target price is closer to $3-4. But that's kind of where we are in the situation. And what has happened is that for Comstock Resources, it just fell along with net gas. As net gas continues to fall, so did Comstock Resources. So you can see this gap here, right here. The company actually reported earnings and they were better than expected. But what happened is that because net gas prices continued to drop, it just dropped further. So that's kind of where we are, and that happened. And that caused huge draw down our portfolio because it's our largest position. But having said that, if I look at the fundamentals of the company, and for you guys who have been following the call and I generally give something like a 20% discount rate and a 0% growth rate for stocks, and it's still significantly undervalued. More realistic assumptions are something like a 12% discount value and maybe a 3 to 4% growth rate. But because we want to be conservative and we want to be absolutely sure that our bets are good, what we do is we take extreme discount rates and assume zero growth. So this way, even if the company falls like 8% a year, we can still expect a 12% return. But you can see here, it's not only undervalued, it's undervalued by 61%. So this means that the company is still a really good hold, but what happens because of natural gas prices is continue to fall. So I do expect it to recover. And even if it doesn't, we can wait extremely, extremely long time because the fundamentals of the stock is so good that I think we can hold it forever and it wouldn't matter too much. We won't take a loss on it, put it that way. Okay, so moving on, the next one is Baba. Alibaba is an interesting one because of the spin-off news that happened in kind of a March-ish period. So in January, it went up a lot, right? You can see it in 2023, January here, and it spiked up a lot. But what happened is that, China, everyone's like, China's crap and all that, so it fell again. And because of the spin-off announcements, it kind of spiked up. But now we're really back to 82. So any gains that we made from December until now came all the way down and came all the way back up and came all the way back down. It's a large position in our portfolio, so it looks pretty bad. So will it continue to get lower? I don't know. But what I can tell you is this: when you look at what analysts are saying that the price of Alibaba should be, including this spin-off of the 6 companies, they're giving a low price of 160, average price 150, and a high price of 220. And so these are all like price targets within the last 3 months, right? So some of it counts for the spin-off, some of it doesn't. But what we are is we're trading at $80. So to the lowest estimate price, right, you're at 50% discount. So this means that the market just really doesn't like Baba at the moment. I can understand why there's a lot of political risk and stuff like that. But is it undervalued? To me, it's still extremely undervalued. 50% is a lot. Okay, so that's Baba, and it's again completely uncorrelated, but everything happened at the same time. Next one is Simo. Simo is a Taiwanese semiconductor. Again, we bought this last year because we thought it was a great stock. And from a fundamental point of view, I'll show you this later, using the same assumptions. We still think it's a really good stock. But what happened is that after we bought it, so obviously the market agreed with us, and there was going to be an acquisition of the company. So here it is. This is what we acquired by MaxLinear, and it's acquired for about $100, $106 per share, per ADS. So this is rough estimates, and it's based on MaxLinear shares and all that, but let's just say $100, right? Currently, it's trading at 55. Okay, so you're talking about like almost doubling of your stock if it gets acquired. And I don't think it's a low chance. I think it's a non-zero chance. I would say it's about 70% chance that this acquisition does go through. If it does, then we have a lot of upside. But even if it doesn't, what we have is a very strong fundamental company. We can say whatever we want about semiconductors, but semiconductors they're going to be around and they're going to grow, right? So they have been really hard hit last year because so have all semiconductors, Nvidia and all that. And you can see here that I didn't use as ridiculous assumptions as I did for CRK. The reason is I just think semiconductors is a great place to be from a macro point of view. This is again when we bought it. And so you can see the discount rate is 12. I give it 0% growth rate and 0% growth rate and still undervalued. The fair value, according to this estimate model, is about where we entered, $76. But should this acquisition go through, you're looking at least $100. So that's within the next three months, we're probably going to know whether this is going to go through. And the downside was quite limited and the upside is quite high, so I continue to keep the stock. Okay, This one is a position I was building, and I really like it because it is owned by the government, and it's national, and it pays a dividend. So one of the reasons why it dropped so much, like if you see this large gap now from $6 to about 526, 540, this is really because of the dividend announcement. So once the dividend comes out, the stock naturally drops. But this, of course, is refunded back into our account via the refunds. So dividends are paid, and you can see in refunds in your portfolio. So what you can see here is that it's also got this significant drop here, and this is because of a profit warning. So this profit warning came out of the blue, like it just came out of nowhere and said that, oh, yeah, company warned that it's expected to make a net loss. This really came out of nowhere. Um, and it took us all by surprise. And this is one of the things when you do stocks, right? It can come out of nowhere. But am I worried about this? I mean, not really, because it is number one, national. So it's not going to default, it's not going to go to zero. Number two, it's still selling like very basic infrastructure. You can see here's a major producer of cement, commercial concrete, and glass fiber. These are stuff that you need to build buildings. And looking at where China is going, they continue to grow. Like you can see 4.5% in Q1. China's continuing to grow. There's some stimulus, and they're spending money on building, right? So this is, to me, a really obvious bet, and I really like it. And it also gives me a 7.8% dividend yield. So it's really good dividend yield. If you hold it like indefinitely, it just gives you 8% a year. I still think it's a great stock to hold. But having said that, from a fundamental point of view, again, when we do the model, it is really undervalued under the same 2000 assumptions, which are, again, ridiculous assumptions, but still 68% undervalued. So I really like the stock as well. Again, because of the timing of it, this 10% profit warning drop, and because it's such a large position on portfolio, it took us by surprise. And yeah, so everything looks like it's gone to crap in like 2 weeks, when it's really just unfortunate chain of events. Okay, the dollar, this one is a trade that we've been in for a while. Just to recap what it is we thought the Swiss franc is having low inflation, so interest rates will be low. US is having high inflation and interest rates are high. So what we're doing is we're playing the interest rate differential between the two. And currently what has happened is that we wanted a mean reverting strategy, and we've been using this for a while. So I've been holding onto a position for a while. And what has happened is that it has dropped non-stop. So you can see here from this chart, it's dropped from $1 all the way down to 86, right? We did actually have a significant position around here, which is about the 0.9 handle. And what happened is it recovered, and we sold around most of our position, and then it's come back down. So I thought it's going to bounce off again quite quickly, but obviously it didn't. So we are down here in the dumps. But do I think this position is going to continue to hold? I don't think so, again, because if I know everyone's on de-dollarization path, but the truth is, where you're going to go? Like, you can't use the euro, you can't use the yen. It's very hard to change that. So for me, the dollar is still going to be the dominant currency, at least for a while. I do think China will eventually take over, but there are a lot of steps that need to happen in between for them to do that, right? So for now, when I look at this, it's like, it sucks. And I'm going to show you my profit assumptions later, but I still think this will recover, and it's got a pretty good chance of recovering within the next couple of weeks. Okay, and I just want to show you guys that the currency is so low. It hasn't been this low since this 2014, and if not this 2015. So it's 2015 what happened was a very strange event that happened. But as you can see, it's never been this. Swiss franc has never been this strong, like much in the last 10 over years. So for it to remain at this weakness, I think it's a bit challenging, and I don't think it will stay. And also, if you look at the drop, it's just been insane. Like, this drop has taken like no time at all, and it's come all the way down here and hasn't really done any retracement. So I'm pretty confident about this being retraced. Okay. Yeah, I wanted to cover wire, but I think I've covered it in one of my written posts. Basically, the price of copper has come down a lot, and therefore wire has some exposure. But why is not such a big position on portfolio anymore? So I didn't include it in the slides. Okay, so what I'm going to show you next is actually the amounts in my account. So this is kind of the opening value, and I took this like 2 days ago. So you can see what you can see here is the original amount that I opened my account and my current portfolio value. It's about 71,000, and I'm happy to show this to during my next investor call or something. But I don't have it open now, so I won't. But yeah, so what's current and it's P&L. So when I talked about the different currencies, just different trades just now, we can say like dollar, Swiss franc. I think it's going to retrace and it's going to make like $700 for the whole trade. It basically needs to break even for us, right? And this would have about 4.16% effect on our portfolio. So for CRK, I'm saying that my opening price is 11.50. I expect it to increase by 30%. So this would equate to a net gas price of something like $3, which I think is reasonable. And this will have a 5% effect on our portfolio if it reaches that level, right? So these are the different assumptions I have. And Simo, this is assuming the acquisition goes through. I assume 110. Of course, you saw just now it's 111 or 113. I can't remember. There's a 5% effect on portfolio, blah, 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 blah. So given all these trades that we have on, I do see a path where we can actually make about 24% of the portfolio back within the next 6 months, assuming we don't do anything. There is a path there, right? Will it necessarily reach that amount? Of course not. Not everything's going to work out. So let's just say 75% of it works out. I still think we can get about 18% of our portfolio returns like within this year, without touching our portfolio at all, where it is at the current moment. Again, doesn't mean it'll happen, and doesn't mean I won't change my mind. But I have pretty good feelings about my assumptions up here and the trades that we have on. So we are down at the moment, right? And this is just reality of what it is. But I'm not worried per se. It does piss me off that so many things had to go wrong at the same time, so it looks worse than it is. But that's just the markets, right? And we can't control it. All our bets are all over the place. They are not correlated in any way. It just happened to be everything just went to crap in a very short period of time. So I'm not worried. I'm still pretty confident of our bets of where it's going. At the very bare minimum, I think we can make like 12% back for this year and be up like 20% this year. I think that'll be a good year if we can get there. But assuming our portfolio doesn't do anything, we don't make any new trades, and again, we do have quite a bit of cash. We are completely ignoring our other trades other than ones you see up here. And again, it's assuming we don't do any other trades at all, which is pretty unlikely. So I do see a path where we can make, back where we are from where we are. 24% seems like a good number, but we'll see. 18% is, if I don't get all the bets right, which is more realistic. And even if I get half right, it's still 12%, which is, I think, pretty good. But yeah, so yeah, it's been an interesting couple of days and couple of weeks actually. So I decided to do this video just to show you guys that I'm on top of things. I'm paying attention. It's not that I'm not paying attention, and I know these things are happening. And yeah, we stick firm. So thank you guys all those guys who have really been sticking with me. I really appreciate it. And it's very encouraging words that are coming out from you guys. So I really, really appreciate you guys and that. Yeah, so there's a state of portfolio, and we'll take it from there. And I'll look forward to hearing you on the next investor call.